Mr. Trump's win in the U.S. election pushed up the U.S. dollar. Those moves initially left our guests thinking, well, maybe populism isn't so bad after all, at least when it comes to currencies. We're joined by Adam Button, currency analyst at ForexLive. Adam, thanks so much for coming on the show.
Pleasure to be here.
So we should, populism, we got surprise results on Brexit and Mr. Trump's election. So a shock to the political establishment for one thing, and a shock to currency traders too.
It really caught market wrong-footed in every direction. We saw something that was massively unexpected, and the market really went away from where most people thought it was going to go, and you saw people reeling and reestablishing positions. Just this morning I read a research note from a bank that had taken out its December FOMC call for a rate hike in the aftermath of the election and then just put it back on. So everybody is scrambling to try to understand what's happening in markets, and to me, I look to the bond market and see what it's saying, and these higher yields mean higher spending, and the market likes that.
It's interesting. I mean, with such a volatile, unpredictable character, with no political office experience or military experience coming in, he went to military school, you think Mr. Trump would worry investors in the US dollar, but nope, the currency keeps just rocking and rolling.
Yeah, I mean, America plays by different rules in politics, in war, and in markets. If it was any other country were to talk about defaulting on American bonds or renegotiating them like Trump had, or to say some of the things he'd had, or to add that element of uncertainty, you would be seeing a massive sell-off in that currency. But America, as the reserve currency of the world, plays by those rules because investors, for one, see the checks and balances in Congress. And I think a lot of this move is more about a Republican Congress, along with a Republican president, who markets are probably anticipating will be more of a yes man on a lot of the economic measures, including tax reform, which will be a big one to watch in the months ahead.
Adam, John here. One of the questions on everybody's mind is the relationship with China. Do you think on January 10th, his first day in office, he'll actually label China a currency manipulator?
This is the big thing to watch right now. The major misstep that Trump could make is tangling with China at the wrong time. I think China may try to play along at first. I don't think he will label them a currency manipulator because it doesn't make sense. I don't think that's coming at least right away, but I think Trump will get into trouble with China, and that's when markets are going to completely turn on Donald Trump.
Because that's going to be big. China, we kind of forget, is America's biggest creditor as well. They hold a lot of U.S. bonds. They could cause a lot of trouble if Mr. Trump antagonizes them too much.
Oh, absolutely. The America-China relationship has never really been established in a way that you can count on it moving forward. China's looking for ways to assert itself in the international economy, and I think they will wait for Trump to show some weakness and to get on the offensive. America really can't afford to go into any sort of trade war or dispute with China. I mean, his rhetoric hasn't been that heavy. I think he'll focus on Mexico, which is sort of picking on the little kid in NAFTA. And if it works, and if it's tremendously successful, he may bite off more than he can chew in China. But this relationship at this point is by far the most important relationship in global markets.
Adam, John here. It looks like the Fed's going to hike rates this December, or at least it looks like it's a slam dunk with regards to the probability of that move being up as high as 94% now. What do you think happens post this Fed rate hike? How many Fed rate hikes do you think are in the cards for 2017? And by how much do you think the market's going to kind of pre-position for this?
It's very difficult to know right now. You're absolutely right. The Fed will hike in December. And what the Fed signals beyond that is critical. And we saw it this time last year. The Fed hiked, and then they were hawkish. And the market went with that, and we had a tremendous run in the U.S. dollar in January, February. And I expect to see a repeat of that again as the market stays in this mode where it's excited about Trump and it's excited about tax cuts, spending, perhaps some repatriation of American corporate funds. And then as we get into Q2, we start to see that the economic needle really hasn't moved. And that is when it reverses again, and it will be a repeat of 2016. So that U.S. dollar highs I expect to see early in the year. And again, the market will start to price in 2, maybe 3 rate hikes, and will be left disappointed by this time next year.
We had the US dollar index, which measures it against major currencies, gain above 100 today. But you do see right through into 2017 upward momentum for the US dollar.
Yeah, this honeymoon will last. I mean, the Fed is going to hike. I think that will put a little bit of a spook into the bond market and the equity market. But beyond that, it's going to improve for a considerable amount of time until we really see what the priorities are of Congress. And I think it will be tax reform and repatriation, and the market is going to like that. It will mean lower corporate taxes, and then eventually down the line, when the economic growth just doesn't happen. And the deficits is the other angle to watch. You know, we're watching the House very closely. You know, these people in the House have been deficit hawks for the past 8 years. And I expect in the next 8 weeks they're going to have a change of heart. Deficits don't matter in currencies anymore. They don't matter in the stock market, and they really don't matter that much in the bond market. And the easiest way to maintain power and grow power is spending money. And we're seeing it in Canada, and I think we're about to see it in the United States.
We'll have to.
And, but it may not happen. It really may not happen. We don't know with Congress.
The deficit hawks might not allow it through. Adam, thanks very much indeed for joining.